Okay, here comes video on Sunday, the 26th of March, 2023. Just gone 2:43 p.m. Chicago time. Do hope you are doing well. So it's the weekend, and so it's time for the weekend futures market recap, where I go through 15 of the largest futures markets and I show you what I am seeing on my charts. Going to start with the Emini, rolling down from the daily chart all the way to the tick bar charts, and then we're going to go through the futures markets, starting with the Forex contracts and then rolling through the rest. And I must admit, reading my feeds this weekend, they're all bearish, talking about collapse of the banking system, the world's kind of falling apart, particularly Europe, blah, blah, blah. It's all death, doom, and destruction. And on the equities markets and bond market, I don't particularly see it. In the Forex contracts, potentially, we can see the US dollar strengthening and the euro and so on weakening. But I think we might kind of surprise to the upside. But given that, I'll tell you the levels that I'm looking at that are kind of significant in order to prove a break or to disprove a break to the upside. So we'll show you that on the daily chart here. So this is the Emini day session only. This is using the traditional chart setup of the better indicators where we have two panels kind of side by side. Left-hand side, everything to do with volume with Better Pro-Am, which uses the average trade size to identify professional and amateur activity. And then we've got Better Momentum, which is a volume-based momentum indicator to show us the swings of buying and selling. On the right-hand side, everything to do with price based on Better Sine Wave, which calculates cyclical activity in 3 different time frames. And when we get breaks of cyclical support and resistance lines, those break us into uptrends and downtrends. Strength is shown in red, weakness shown in white or gray. And so at the moment we're in a dark zone, which means that we've been in an uptrend here with the background in red on both charts, and we've just had a little bit of weakness. And one of my favorite patterns has stepped in on this daily chart, which is a retrace in the dark. And a retrace in the dark is when we drop through a support level or resistance level on the lowest time frame and are caught by support or resistance in the next highest time frame. So on this daily chart here, you can see these little light dotted lines. We broke through that and we're being caught in this next highest time frame by this support level here on the intermediate time frame. So that's a retracement in the dark. And for it to be proved correct, we need to break above and keep above the support level on the lowest time frame there. And you can see we did that for a couple of days and we've come back down and we're sitting right at that level. And that level is pretty much 4,000, dead on 4,010. But that's the level that we need to keep above in order for this support level to kind of break out. For this to be disproved and go the other way, we need to break through the support here, the SR2 at 3840, which is quite a fair ways away, 150 kind of points away. But that's kind of the spread that we're looking at here. So if we drop through that level, it's kind of all bets are off. We're going to go down and make support on the highest time frame because we're sitting under that resistance on the highest time frame, and this pattern will kind of play out. But as long as we're above that 4,000 level, technically that support has held, and so we're in strength and an uptrend. So that's what I'm looking for on a bigger picture. Those are kind of the key levels. So if everything's kind of wrong, that that we're not going to see strength, we'll start to break towards the 3,900 and then 3840 level on the way down, if that's what happens. So let's go down some time frames. The 135-minute chart here, we're in an uptrend because the background is printed in red. You can see here, better sine wave, we're breaking above resistances here. That's why the bars have turned red into an uptrend. And we are above the trailing stop on Better Pro-Am. And that's why the trailing stop is kind of flipped down here to red underneath the bars. We had exhaustion sell and bullish divergence, a couple of flush patterns here, and then these blue professional bars kind of came in and we broke above the high of that. And we're keeping above the high of that sequence there, that little kind of area, which is good, which means that's strong. This exhaustion buy pattern is potentially a short covering rally, so we triggered out a lot of people out of their short positions at that point there. And so they're either kind of reversed or kind of gone flat for this trend. But on this time frame, we've broken into an uptrend. Similarly, on the 45-minute chart here, you can see, yep, we did break into an uptrend. We're in the dark at the moment with the background just black, but the bars are red on better sine wave. We've got a blue professional bar kind of come in here on the 45-minute chart, and we're breaking above that. Friday was a pretty strong day, so we had Rambo patterns here. Poor old amateurs getting confused, going short at those lows. They get caught out. That's a potential reversal of an amateur breakout, and we've broken above the highs of that yellow kind of sequence there with all the amateurs playing at that point. The professionals step in, bang. They get a little bit too excited here, and we kind of fall off, and then the professionals, whoops, kind of step back in at this point here. So we're strong on the 45-minute chart here. 15-minute chart, yep, we did have some weakness at this point, but the blue professional bars kind of stepped in. We're strong at the moment. We've got this cyclical support to come in on the 15-minute chart. So this week's activity, pretty volatile because of the Fed announcement. That was kind of the high we reached down here. We had a sell-off. We kind of came back and tested again, and those are the blue professional bars that stepped in at that point, and we've rallied back. Now, we need to get on above this kind of 40.27 level here to trip better pro-am the other way. So we need to see some strength on Monday to kind of see this rally kind of continue, and then eventually get through this 40.80 level up here. But let's wait and see. And then on the tip bar chart, my I'm a bit of a broken record when it comes to these Rambo patterns, but you keep on seeing them at these turns. Now on the tip bar chart, we are looking at the day and the night session here. So some of these patterns get triggered in the overnight session because the average trade side is low. But you can see here catching the swings. At the beginning of this week, we had Rambo patterns right there coming in at that low. We got bought out. During the Fed announcement, Rambo patterns at the high, and then we kind of dropped off with Yellen's comments here. And then the low, everybody thinks, the amateurs think we're going to go lower at, 39.40-ish, 39.50-ish, and the Rambo patterns step in again, and we kind of rally against that. So it's kind of a classic Rambo to Rambo to Rambo type channel, just showing us those kind of breaks. So just bear that in mind that, the market, the general public, the amateurs trading, this week did think that the news was all bad, and so we're going short at that point. And it turns out, we've had a little bit of a rally on Friday, and we've broken into an uptrend. So we just got to play this thing out. Now, where's this going to go on the upside? Typically on this kind of tip bar chart type setting, we're breaking above resistances on 2 time frames here, on the low and the intermediate time frame. And yep, we're coming up to a cross at some point on resistance on the highest time frame, but this has got to play itself out to an end of trend signal on the lowest time frame at least, and we should be looking for something like an exhaustion pattern on the way up. So where we might be kind of pushing a whole bunch of stops to cause an exhaustion pattern would be this last kind of pivot high. So what is that, 40-ish kind of level? Yeah, 41.5 is that level here. So around there, that's going to be absolutely critical. So 30 points away from where we are, we might start to trigger that kind of exhaustion pattern, and it might be an area where we kind of reach and inflect and kind of go the other way. But let's wait and see. But at the moment, on these time frames, for me, I kind of start to see some strength. Although I admit, all the news and the news, the commentary is incredibly bearish at the moment. So, and this level 38.40, if that does get cracked at some point this week, then kind of all bets are off on this uptrend. So there we go. That's my thoughts on the E-mini. I'll show you the E-mini tip bar chart in a second. For the triple signals, this is where we look at the 3 indicators and look for signals where they kind of all are signaling together for potential kind of signals long and short. And we'll start with the euro and then go through the forex contracts and then into the E-mini and the bonds. So on these charts, we've got these solid yellow lines which indicate the beginning and the ends of the week. So you can see this week's activity in the euro. We had a rally that kind of started mid last week, and we kind of peaked this week at almost 110, and we've fallen off since. It's been a U-turn going on here. Blue professional bars taking profits and then getting the move going here with this sequence and kind of dropping through. We did not have a triple signal right at the top. We had triple signals kind of earlier on in this move as this kind of went down. So I'm short the euro at the moment, and we're having a little bit of consolidation at the moment, but I need this move to continue lower. And I think because people are starting to realize that, yes, we might have a problem with the banks, but that problem is worse in Europe, possibly, than the US. That's why the euro might be kind of weakening at the moment. So that's the euro kind of looking weak. Can we see it in the other forex contracts? Let's look at the British pound. British pound last week, we had a nice little setup here at the lows, kind of caught that rally. No exhaustion buys at those highs, but a similar type of pattern with blue professional bars kind of taking profits up here and dropping through the lows of that. So the British pound is also weak. and Aussie Dollar. Aussie Dollar, I said this before, tends to be kind of high beta. Kind of you can see the moves in the forex contracts maybe being first replicated in the Aussie and move stronger in the Aussie because it tends to be kind of highly traded, if you like. So this week we did have those triple signals kind of going on here, very junky, kind of up and down at these points, but then we've kind of turned into a downtrend here, getting this move going. Got a little bit, some blue professional bars kind of come in, and actually a signal gone there, but the exhaustion pattern is way away. So that triple signal is based on oversold at the moment. Blue professional bars come in and we've broken above the trailing stop, and an exhaustion sell and bullish divergence pattern, but that pattern is miles away. So I don't like that for a signal on the Aussie because that doesn't kind of make sense there. So that's the Aussie and Japanese yen. Japanese yen, we've had a signal this week, kind of short, but we kept on going up. Again, this signal not based on exhaustion buy or bearish divergence here and here. It's based on patterns happening a lot further away. So I'd discount that as a signal because that doesn't look right. But we've come into these highs. Let's wait and see. When there's financial stress in the market, Japanese yen can trade a little bit differently because the yen carry trade. But that's also the case with the euro as well. So let's wait and see. But forex contracts look a little bit weak, and so the US dollar is strong. Now, E-mini on the 13,500 actually triggered a long signal at the end of Friday. So there we go. That's exhaustion sell, bullish divergence kind of come in here. We've tested down there. So it's certainly not a classic. And then we've got blue professional bars kind of coming in at the end of the day on Friday. So don't particularly like that as a signal because we'll often get blue professional bars at the end of the trading day and the end of the trailing week, just kind of taking profits, getting flat. Don't want to be holding positions over the weekend. So it's not a classic there, but let's just see how that kind of plays out. Bonds this week did rally nicely. We had signals here midweek, exhaustion sell, bullish divergence, flush pattern. That's a nicer kind of sequence. All those blue professional bars coming in at the lows, and we've rallied. Now at the highs up here, yep, we've had some weakness, but no blue professional bars, no exhaustion buy. We've just sold off, and we've got blue professional bars kind of coming in here, similar to the level that we bought this kind of holding area and breakout area kind of came in. So the bonds are still looking strong at the moment. So let's see if they continue this week. So gold, silver, precious metals, and Bitcoin and so on, they were very strong over the last couple of weeks. But with Monday's activity, we kind of peaked here with exhaustion buy, bearish divergence. And we've had a short signal here. We've come back to test into that area at 2000, and we've got some weakness at the moment. So let's see if we break below, kind of 1950 or some more blue professional bars kind of come in to tell us what's going on with gold. Silver's also been strong this week. We kind of bottomed down here. We never got that signal down there because we just had exhaustion patterns getting the move going. Had a little bit of weakness here, but that was based on exhaustion buy here, so that's no good. But exhaustion buy, kind of midweek, bearish divergence, no blue professional bars at the highs. So, yep, silver still looking strong at the moment. And Bitcoin. Bitcoin, yeah, we had a signal towards the end of the week here, exhaustion buy, bearish divergence. Bitcoin is super volatile, and I keep on looking at this chart and thinking I should be bumping up my time frame, but that was the week's activity. There you can see the beginning of the week and the end of the week. So we were just moving through this pretty wide range, 27,000, 29,000. So it's got some strength at the moment, oversold. Blue professional bars kind of come in here, so yeah, that's looking strong to kind of keep going on Bitcoin. So they're looking good at the moment. Now, crude, I was interested in crude last week because of this pattern kind of going on, and we did rally from 65 to 72 almost. And we've kind of dropped off here. Some blue professional bars kind of come in, that didn't hold. We kind of dropped back down again. But I'm still liking crude. We just need more confirmation, more blue professional bars kind of come in, and to get above 71, 72 would really show that crude's on its way. Natural gas, I've been liking this for a while, but it's testing my patience a little bit here. We had blue professional bars, exhaustion buy kind of come in, and we kind of sold off. This low $2 range is really important, but we're not seeing enough, kind of blue professional bars kind of come in here on the tip bar charts to hold it. So we're just basing in natural gas. And then copper. Yeah, copper, this took off this week. But we didn't have a signal at the lows because we didn't have exhaustion sell. We did have blue professional bars kind of come in, and we broke above the highs of that. Showing a little bit of weakness at the moment with exhaustion buy bearish divergence and flush patterns, and we've kind of dropped off. So let's see if $4 kind of holds on copper at the moment. And lastly, the ags. So nice signal last week into corn. It's been jumpy the whole way, but on these little dips you can see the blue professional bars kind of come in. Now a little bit of profit taking up here with blue professional bars up here and here and here. So not signals short though, no exhaustion buy. So soybeans, the signal didn't work out here, that didn't hold, we kind of fell through, we've come back down again. So we're in a downtrend on soybeans. And lastly, wheat. Wheat, we did have a nice signal. Look at all the blue professional bars. So when there's lots of blue professional bars kind of come in, that's a good sign that the professionals are really starting to get active. Exhaustion, sell, bullish divergence, break above the trailing stop on better pro-am. We test down here and bang, we've rallied. And then on that little test, that's a stair-step trade where the trailing stop with better pro-am kind of ratchets up. Blue professional bars coming at the lows because they haven't taken profits here, and we've ratcheted up again here. So wheat is in an uptrend. So there we go. It's going to be an interesting week. Let's see if the little rally that we started to generate on Friday on the equities markets kind of keeps going. And with Euro, let's see if that continues to weaken this week. So that's what I'll be focused on my charts. Hope your trading is going well, and looking forward to this week's trade.